Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Again, we want to get to sort of the main geopolitical risk right now, and that's the fighting between Iran and Israel, with President Trump leaving the G7 early to deal with that. Ethan Bronner is Bloomberg News Israel bureau chief, and he joins us now. Over here in the U.S., we're trying to understand what the U.S. position is when it comes to President Trump and what's happening in the Middle East. Where are we where you are in terms of what Israel is doing and what its end goal is?
I would say that the confusion over what the United States is going to do is equal here as it is there. Israel has set up this plan to try to take down the Iranian nuclear facilities, as well as its ballistic missile capacity and its militia ability beyond its borders around Israel. So it's launched this plan. It says it can do it alone. It would love the United States to help out, in particular because there's one huge enrichment facility, Fordo, which is deep in a mountain that would be best gotten if you wanted to destroy it with 30,000-pound bunker busters that only the United States has, and that only its B-2 planes can lift. They're so heavy. So right now, we're all waiting to see, might the U.S. decide to join, or might this moment be one where the Iranians decide to negotiate, agree not to enrich uranium?
Ethan, it just seems to me, at least, that Israel, as it relates to Iran, sees maybe a very rare opportunity to really deal almost a kind of a death blow to them, at the very least, as a threat, maybe even to their government. Is that the feeling in Israel, that this is maybe a special moment, a special opportunity for Israel?
It's 100% the feeling in Israel, Paul. The thing is that, it's one thing to say this is a rare moment to go after, to defang this regime and take away its ability to be so destructive. It's another thing to say that, therefore, it's possible to overturn this regime. Look, it might be. It certainly would make them very happy in this country. But remember, the Iran-Iraq war went on for 8 years. Yep. And the regime in Iran put up with an enormous amount of suffering, and it is still there 40 years later. Mm-hmm. So it's a little bit of an illusion. It could be an illusion to think that, just like in theory, by taking out, by being so painful in Gaza that Hamas would yield. Hamas hasn't yielded yet, has it?
Exactly.
Is Israel listening to the United States, or will it? Like, once we get clear on what President Trump's position is?
I think Israel cares enormously about what the United States says. And I think I'm certain it would not have launched this attack without assent from Trump in a phone call last Monday, and generally over these last months. So if Trump were to suddenly change, look, at this point, it's hard to know because Israel's in the middle. By the way, I don't know if you're hearing, but we are having an attack on the Tel Aviv area right now with Iranian missiles. I'm in my secure room with a steel door and a steel window and reinforced concrete, so I'm as safe as I can be, so I can keep talking to you. But people across central Israel are running to their bomb shelters. Yes, I think what Trump and the United States want is very important to Israel. Absolutely, they've been coordinating very closely.
So, Ethan, I guess the next step might be, as you suggested, use of some military armaments to maybe deal a knockout blow to the Iranian nuclear facilities. Mm-hmm. Is there a sense that is being discussed? And if so, is there
There's no doubt. There's no doubt it's being discussed. There's no doubt that, look, if you look at the Americans have moved the Nimitz carrier group from Asia to the Mediterranean. That's the second carrier group. It's also sending it's sent THAAD anti air defense systems to Israel. It's moving stuff here in preparation for participating. That doesn't mean it will. And there's no question in my mind that the Trump administration is examining this possibility right now. And I don't know what it's going to decide. But we do know that the president left Canada, left Banff early, and said that he needs to deal with this issue. And he didn't sound like he was interested in some kind of deep negotiation, right?
Well, Ethan, thank you so much for joining us. Ethan Bronner, Bloomberg News, Israel Bureau Chief. Stay safe. Good luck. Our thoughts, obviously, with you as he reports during an attack. That is something that is tremendously amazing, and reporting and all of that. Ethan, we thank you very much for joining us on that. I will continue to follow those headlines as they continue to cross. Again, U.S. President Donald Trump leaving the G7 meeting early in Canada to focus on this Israel-Iran conflict, stating that he wants a real end to the nuclear dispute with Iran, not just a ceasefire, when no one really knows what that real end will be.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Alix here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube, as well as all your streaming devices. You can check us out on Bloomberg Originals. All right, so late last evening or afternoon, the Senate Republicans laid out its own version of the tax bill. Joining us for more is Henrietta Treyz, Managing Partner and Director of Economic Policy at Veda Partners. Henrietta, for you, what was the biggest surprise?
The biggest surprise to me had to be the Medicaid components. Some of this stuff we know is going to have to be negotiated for the next couple of weeks, if not month, at least a month from here, given the disparity between the House and the Senate. But the Medicaid cuts really have a constituency of no one. I'm not sure exactly how they're planning to thread the needle just in the Senate, let alone the House with this package. They obviously are on a hunt for revenue. The tweaks that they made, I think, based off our estimates, which come from my colleague Spencer Perlman, suggest that we're looking at like $200 billion in additional revenue from Medicaid. But I want to be clear, this cuts off 35% of the entire state of Alaska's Medicaid recipients. And that's not even the most recent analysis and accounting from CBO. So they're going to have some serious problems with this piece. That really surprised me. So
talk to us about, is this, I guess, the next date that we're all waiting for? Is it kind of a July 4th? That's when the Senate wanted to get something done. Is that still on the table?
You know, I just can't get my head around July 4th. I understand optically and emotionally it sounds good. It's a feel-good story to have this done by the 4th of July. But the only way that members of Congress operate and act is with a sword hanging over their heads, and that's the debt ceiling. So last week, CBO actually pushed out the debt ceiling deadline to mid-August to mid-September. I think that's why you're seeing Ron Johnson, the senator from Wisconsin, saying, we're going to be negotiating this all the way through August, is because they don't have a hard and fast deadline until they need to hike the debt ceiling, at which point the debt ceiling will be, like $42 trillion and get us through November of 2026. So they've got a long way to go, I think.
Going to my world, and that's the energy world, I was really interested in how wind and solar got no relief in this. I can imagine, and neither did hydrogen. I can imagine that the alternative energy lobbyists were going hardcore for weeks in terms of the senators. And I'm just wondering, why? Why keep tax breaks for utilities and purchase power agreements for wind and solar, but not for consumers?
Right. And I think, Alix, you're really nailing my sentiment right now. I'm trying to talk with as many staffers as I can to understand the why behind this package. The IRA tax credits are extremely popular in Republican states specifically. 70% of the flow is going to those districts. So that is really important for a lot of senators who are up for re-election next cycle. I'd highlight Tom Tillis most particularly on this one. I think that the IRA tax components need to be adjusted from here. It's plain from the fact that the SALT cap, for example, is not even addressed by this package. It's just kept at the 10K rate, that they're going to do more tweaks. So I'm expecting some pretty substantial changes to the IRA side, to the residential stuff. I mean, we knew some things were going to come out, like the electric vehicles tax credit is standard operating procedure. We knew that was going to come out. And there's some understanding, to get to your specific question, that there's a duplicative component to the residential and commercial building tax credits that already exist at the state level. So why does the federal government need to layer them on? So that's one piece. But really, I can't thread the needle and get you the votes for this package right now.
Universities, kind of surprised to me, they came out a little bit of a winner here. Reduced excise tax on university endowments. That's a big one. Where did that come from?
Yeah, that's a big one. There's actually a lot of really random stuff that is and is not in this bill. The university piece obviously is very much at odds with the public projection that the administration has taken towards universities. And I think that is pretty widely supported by Republican lawmakers and voters. Obviously, the senators are indicating that maybe they're not all the way there yet. But there's other pieces that are not in this bill. Like there was a proposal to tax cruise lines that you'll maybe remember Commerce Secretary Lutnick came out in wholehearted support for. But again, not to harp on Alaska, I don't know why I keep talking about them, but that would have been a hit to Alaska. So they chose not to use that component to generate revenue, but they did choose to cut the Medicaid stuff and kick, I think the latest estimate is 16 million people off Medicaid. So there's a lot of confusing pieces here. I'm really just trying to thread the needle to find the 51 votes for this package right now, and I can't get to it.
Okay, so then what happens? So you can't get the 51 votes. We don't even know if the House Republicans are going to like what this bill is. So what happens now?
Yeah, so, let's talk about maybe the underreported component here, which is the potential that this doesn't pan out. We still have 30% odds that they kick this into into December. Senator Lindsey Graham is the chairman of the Budget Committee, and he's being really clear that Republicans have 4 bites at the apple on reconciliation, and he's entirely correct. They don't need to have this entire comprehensive package ready for prime time, especially with Israel, Iran, and the $175 billion in this package that goes to military preparedness, another $150 billion that goes to immigration. There's a lot of ways for Republicans to operate for the next year and a half going into the midterms that doesn't have to be this one big package. So I think there's going to be some renewed discussion, especially as we're talking about delays for forward progress, about maybe breaking this bill into pieces. The $5 trillion debt ceiling hike alone loses you Rand Paul's vote. So there had already been conversations about cutting that back down to $2.5 trillion and maybe passing these bills piecemeal. That is an option. It's a low odds prospect, but it's something to be mindful of as an investor.
So just 30 seconds on that, raising that tax ceiling by $5 trillion. I can't do that on my balance sheet, but doesn't seem to be a problem for the federal government.
I wish I had that kind of checkbook. That'd be pretty fantastic. This is a absolute record by a magnitude that I can't even do the math on. I think the last time we increased the debt ceiling by a specific dollar figure, it was like 1.2 trillion, and that got us almost a year and a half worth of functionality. Now we're talking about a $5 trillion hike, which, by the way, is $1 trillion more than the House has authorized, and it only gets us through the midterms. That's pretty exorbitant. And that really speaks to the sheer volume of deficit increases that's in this package. And it is also, the most regressive and substantially underwater bill that has passed. It's a negative 29% approval right now. That's pretty rough.
I mean, I think rough is like an understatement.
I mean, I've been a citizen of this country for 61 years. I have no idea how they do that. I mean, I guess it's just kick the can down the road at the highest level, I guess.
Yeah, I know. Also, it's like a whole new definition to the whip. What are you whipping if no one's going to be whipped? All right, Henrietta, thanks a lot. We really appreciate it. Jump back on those phones. Let us know what you find out. Henrietta Treyz, Managing Partner and Director of Economic Policy over at Veda Partners.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, let's get a look in on the markets then. What do you do when there are headlines like this? Shelby McFaddin is investment analyst at Motley Fool Asset Management to discuss her outlook. How much risk, Shelby, do you think you should have in the markets?
Well, I will start off with saying we are staying invested, right? There are points and in certain portfolios where we have a little bit more cash than we would like to. And it's not because we're sort of taking that step back approach and saying, let's get out of this. We don't want a part of it. It's more so that we're seeing that some of these pullbacks along with the rallies are really broad-based. And so the opportunity for buying in terms of getting in at a price that would favor us in terms of that long-term return, it's not showing up as in a way that we would like, right? So where there are higher cash balances, it's because we're sort of waiting for those fair valuation opportunities, but going ahead and staying invested because we can't control these sort of big market shocks, right? And it is a bit uncomfortable. It is something that requires a very long-term orientation in order to sort of suffer through it. But it's not putting us on the sidelines. If anything, we're much more active. We're spending a lot more time filling up the universe, even when the price opportunity doesn't necessarily present itself, and just adjusting according to that sort of geopolitical risk as necessary.
Are there certain sectors that screen well for you guys? A lot of folks were saying, boy, now I have an opportunity to buy the Mag 7 when they sold off earlier in the year. What sectors screen well for you guys?
I think right now we have surprisingly actually taken a closer look at certain financials. And in terms of some of our core and income-oriented strategies, trying to get a better look at certain consumer staples companies that are just good at what they do and have been overlooked and sort of punished for where we are in the cycle. In terms of tech, we've taken a look at ServiceNow, which has remained a bit expensive, but they're very mature in their space. They have high quality leadership, great retention, fantastic cross-selling opportunity. And if the runway for agentic AI has been pulled forward the way we think it has, it's a great opportunity if we sort of see any sort of market dip that allows us to enter that position sooner.
Now, you were stalwarts of, say, Costco and Walmart, and I'm assuming you still are, but if I max out on that position, what do I do?
You max out on Costco and Walmart and you're already maxed out on MasterCard, you can do what we've been trying to do. You can go ahead and play that cow position that we've seen coming up the past week or so, which has been Costco, O'Reilly Auto Parts, and Walmart. So
that's a thing?
Yeah.
Did you coin cow?
I did not coin cow, and I was devastated that I didn't.
Okay, so
Costco, O'Reilly Auto Parts, and then Walmart. So O'Reilly had been something that we were looking at because when you think about it, and this has been something that's been ongoing since we had a lot of that inflation in autos in 22, 23, people were fixing their cars, right? Now, when we look at that savings being depleted, people are doing that again. And then you add on top of savings depletion, student loan resumption, and tariffs, you're definitely choosing to fix your car if you can, right? And so that has been something that has been periodically a little bit more expensive, but very much staple oriented, similar to how people are fixing their homes instead of trying to sell and buying new ones. So if you can't get into some of those staples already and you're still not able to get into the toll takers, MasterCard, you could wait for something like an O'Reilly to pop up, or you could look in some of those other consumer staples that are more in sort of the like health and beauty sort of space. Kenvue is a great option for that. We've seen that white label has not penetrated that sort of consumer health space the way that we would expect it to. It's kind of hanging out kind of flat.
The average age of U.S. cars and light trucks, 12.6 years. I'm looking at John Tucker when I say this.
Well, have you looked under the hood of your car? I mean, there's nothing in there I recognize. I couldn't do that anymore. I used to be able to change out a carburetor. Not anymore.
I'm sure there are YouTube videos for that.
Well, yeah, whatever.
It's basically my new car, a 2024 vehicle is. I've been saying it's basically
Please
my
don't
iPhone
go anywhere
spaceship.
near your engine.
My iPhone. It's an iPhone with 4 wheels. That's what it is. So,
it is.
It's crazy. Is the Fed going to help us out this year, or should we not rely on that?
They could help us out this year, but I wouldn't expect it to be until the end of the year. And as a result, I would not rely on it. I've coined in my team, this is something I have coined, frozen Fed summer. I think that's what we're going to see because there's so much murkiness in the data, right? We're about to enter a period where there's not going to be too much promo shopping. We will have a little bit of promo in July 4th. But a lot of the vacations have been booked, right? Once we start to get into August, it gets a little bit more promo activity for back to school. So there's this short window for June and July where we can probably have a look at the data and say, are people still spending? Is this kind of just the weather? What are we going to get here? And so that'll help us out a little bit. But shortly after that, we'll have murky data again from promo from Labor Day, and then all of a sudden it'll be promo from Christmas. So I'm not sure the Fed's going to have a great idea what we're looking at unless there's a really huge swing in employment in a negative direction. I would probably bet that employment would push them faster than just sort of retail and CPI data.
How do you guys look at the international trade, right? Bank of America Fund Manager survey came out today and said that 54% of respondents think the international trade is like the place to be in the next 12 months.
We have on our team, that's something we started looking at a couple of months ago. We were, I don't want to say early movers, but we were early believers in the international trade and especially in Europe. Now, Europe had gotten beat up for a long time, but it's a place that we decided to just stay the course. And that is part of what comes with active but also concentrated portfolios where you're going ahead and saying, let's handpick 20, 30 spots, and this is where we're going to position ourselves. So thankfully, we're not having to time the market there. But we have decided to take a step and say, okay, is it European discretionary? Is it European financials? Is it European defense, right? Where do we need to go ahead and take more time and be more interested in just building up that universe? So the short answer to that question is yes. We're definitely taking a look because especially between France and Germany, we know that there's going to be more spending there. Not just defense, but in general. The world's savers are about to spend a bit more money. So how can we go ahead and orient ourselves? We have strong positions in companies like Icon, which is in pharmaceuticals, Nintendo, which I don't have to describe Nintendo, right? That's just a strong operator. But we also have positions, and these are in our model portfolios, companies like Simrise, where we're talking about different additives for scents and products like that. So being in that space already sort of gives us an advantage when that market kind of comes in the upswing.
One other name here I want to get to, United Parcel Service.
Yeah.
The folks in Brown. What's going on there?
So that's always been one of my favorite positions. It's something I've covered ever since I've been at Motley Fool Asset Management. And it's because they have a fantastic operator. Carol Tomei is a force of nature. They've gotten beat up over the past year or so because of the labor negotiations. I think a lot of investors thought they were going to come out with a bit more of an upper hand than they did, but they've already faced a lot of those costs on the upfront. What they've gone ahead and done is shedded business that's not profitable for them. And so that business is now going to absolutely dilute pricing in the market, and they've taken themselves out of it. So when we come out on the other side of this business cycle, we feel very comfortable with our position in UPS because people find ways to buy things. When we look at the overall financing nature of just consumption at this point, we know that there's going to continue to be movement of goods. And so finding that position where they're also a solid yielder and pretty high shareholder return, we're more than happy to be there.
Great stuff, Shelby. Always love chatting with you. So fun. Shelby McFaddin, investment analyst at Motley Fool Asset Management. I'm so upset you didn't coin cloud. I mean, cow.
I know. And it's just, I think the journalist who did, I want to meet that person.
Yeah.
Because what a line.
What a line. Yeah, they need to get into marketing. All right, Shelby, thanks a lot. Always wonderful to get your perspective.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.